Welcome to Investors Insight, where today's topic is a week worth watching. A lot going on this week, a lot of important reports coming out. We're starting the week with volatility caused by the Middle East conflict erupting over the weekend. But Trey, a lot going on this week, a lot of reports on inflation, interest rates. Start us off, talk about that.
Yeah, this will be a big week for interest rates. We've been talking all year that we watch the 10-year Treasury interest rate very closely because that bleeds into mortgage rates, it bleeds into borrowing rates for corporations, and bleeds into a lot of the economy and the stock market. And when you see interest rates going up, that's a concerning sign that we may be issuing more debt than we can sustain. And also, it's an inflation trigger potentially. And so we've seen the 10-year Treasury rate inch higher since, like you mentioned, the conflict was initially, seemed to be cooling. We saw rates drop. That was positive. Seeing interest rates move back above 4.5%, which is kind of concerning to us. This week, we'll get the consumer price index and the producer price index. Those are both very important indicators as to where interest rates are going, where costs are going. This will be the first report since we've seen oil prices drop. So a lot of expectations are that the consumer price index will actually be negative, not just a lower growth rate, but an actual negative growth rate. So that if that materializes, that would be very important. But also this week on Wednesday and Thursday, the chairman of the Federal Reserve, Kevin Warsh, will be speaking to Congress, speak to the House on Wednesday and the Senate on Thursday. Now, Kevin Warsh, as we've been talking about, has been famously tight-lipped since becoming the chairman of the Federal Reserve, believing that actions speak out louder than words, and has tried not to give any hint to the market of what his thoughts are or where the Fed may be going. But he's required by law to speak to Congress. And so it'll be interesting to see what he says when he's required to speak and how he does it and how, and the institution sets up. So that will be moving the interest rate markets for sure. And so big week for interest rates, which then bleeds into the stock market. So we're watching that very, very closely.
Yeah, and so with the Middle East conflict causing problems again over the weekend, it's more important than ever for corporate earnings to come in strong. And we will start to see if this becomes reality this week as earnings season kicks off. And I wanted to share this chart that provides an update on the 2026 and 2027 earnings and revenue growth rate estimates for the S&P 500 index and each of its 11 sectors. So the index's year-over-year earnings growth rate estimates were observed at 25% and 17.4% in 26 and 27. Also, what's interesting, 7 of the index's 11 sectors have 2026 calendar year earnings growth rate estimates above 10%. So if actual numbers come in at or above estimates, this bodes well for stock market growth. Also, earnings and revenue growth rate estimates continue to reflect rising corporate profitability and efficiency. So the information in this chart matters because, unsurprisingly, increased estimates have translated into higher equity prices. Also, revenue growth rates remain persistently positive as well, with 2026 and 2027 registering estimated increases of 10.4% and 7.6% respectively. So time will ultimately reveal the accuracy of these estimates, but we maintain that increasing corporate efficiency coupled with higher revenues could be the best catalyst for continued equity price growth, especially with the uncertainty around what the Fed's doing, everything Trey talked about around the uncertainty around interest rates. So corporate earnings matter. We start that this week. So we'll be watching that very carefully. So if you want to ask us any questions on anything we've discussed, call us, email us. We love to engage with you on these topics. We hope that everyone has a great week. Thanks for watching.